you don't even see that you're bleeding, because if you're paying a couple $100,000 in taxes, you're paying more in taxes than the average American makes.
So, Chris, I want to hear a little bit about your background and kind of how you got into the stuff that you're doing now, helping, high net worth people save a crap ton of money on their taxes. But before we kind of get into that background, give me the one sentence that when you first say it to, potential clients or high net worth people or high earners, give me that sentence, that stops them cold in their tracks.
Well, the first thing I tell them, Caleb, and thanks for having me. I really do appreciate it. I love to be able to share what we're doing to help people. But the first thing I tell them is, for people that are successful, high income, high net worth, your greatest financial burden, your greatest cost financially is taxes. Yeah. Therefore, that's your greatest wealth eroder, hands down.
Yeah.
And so when people really get to sit back and think like, oh, wow, you're right. Like, do the math on a 30, 40, 50-year career, millions and millions and millions of dollars going out your back pocket in the form of profit to the government and the state.
Yeah, and there's a reason that around, as of the time of this recording, we're recording this on April 1st, right? We're 15 days away from tax day. There's a reason that everybody who is successful and should be happy, right? Because they made a lot of money the last year. There's a reason they're all stressed out and pissed off, and you don't want to, they don't want to talk to you, or if your K1's late, they're mad about it or whatever it is, because everybody's on edge, probably because they don't have a very good plan. Would you agree with that?
Agree. I mean, it's funny how many times a client will come to me and tell me, yeah, my CPA said you should just be happy you're making this much money. Not about the taxes you pay. And it's like, that's crazy. Like, I love to use the example of Matthew Stafford. About $40-something million that he made after federal and state taxes, he ends up with $19 million. You may say, oh, whip-de-doo, he made $19 million. I say he just funded an entire society with his tax bill. That is not just. That is not right. That is not what our tax system was created to do.
Nope. And we could get into all of the things that money goes to, that fraud and all that other kind of stuff, but we don't have time to go in that. I know pre-show you and I already hit it off pretty well, so we're on the same page about a lot of stuff. But you've been doing this, Chris, for like 30 years or something like that, but I know you probably didn't always think about taxes the way that you do now, and something happened in 2008, right? We all know what happened in 2008, but walk me through that. Why did 2008 change everything for you, specifically in, related to taxes?
Sure, yeah. So, and just to give you a little background, I guess, we've been in business for over 30 years. I've been doing this for about 20. This is all I've done. My father is my original partner, so he's been doing it a little over 30 years himself. He's in his 60s. And we used to be traditional planners. Mm-hmm. And obviously when you had 2001, 2008, 2021, things like that, those kinds of years are really bad years typically for a financial planner, because your clients aren't happy because they're losing money.
Yeah.
And so the clients would innately come to us and say, hey, why aren't y'all, avoiding this? Why didn't y'all see this coming? Like, why didn't y'all prevent us from losing money? And it's like, well, we don't have a magic 8-ball like Nancy Pelosi to know when to buy or sell. We don't know that. We don't have that kind of information.
Yeah.
But the beauty of it, just to answer your question, is we went back to the drawing board and we had that kind of aha moment, light bulb moment, and realized that for a handful of our high net worth and high income clients, we had been implementing some tax mitigation strategies to save them taxes. Mm-hmm. Now, back then, there wasn't information at our fingertips like it is now. So there's a plethora of more strategies. We have about 20 that we implement. But there were a handful back then, some that we don't really do anymore, but they were good back then. But the point being is, it was like, wait a minute. I can't guarantee someone a return on their investment, just like you're not going to guarantee that what you do. That would be unwise. But in tax savings, It's like, wait a minute, there's not only is there a guarantee if I save on taxes, but there's an ROI on tax savings. There is a
Yeah.
return back to you of money that otherwise was gone that you didn't have
Yep.
if it wasn't for us.
Yep.
And that was a big moment for us where we really shifted and said we need to be the bridge between the financial industry and the tax industry, the
Yeah.
CPAs and all that, because they're reactive. They're not proactive. Typically, a CPA, they're not providing the real solutions that their clients need. But we're not here to make them look bad. We really want to work alongside them and make them look like the heroes. And ultimately, the client ends up with more money in their pocket, which is what's best.
Yeah. So if you were to summarize, I guess, because it sounds like you and your dad basically after '08, you're like, we need to essentially rebuild our entire practice and its focus and how it prioritizes serving people. Am I understanding that? Like that's kind of like it was, and a lot of people had a wake up call in 2008, right? Like it was a big wake up call for a lot of people, but you are like, I know that we can put more money back in people's pockets the best way by doing this. And so what's the principle? Like what's the one kind of guiding principle that like it unlocked that was the way forward, for helping people?
I mean, again, I think it goes back to what I said in the beginning is the biggest cost expense to a successful person is their tax bill. I don't care if your business revenue was 10 million. I care about what you brought home and what you paid taxes on. So a lot of times people will come to me and they're like, oh, I'll make $5 million or $10 million or 20 million, but they're really talking about their revenue.
Yeah.
And it's like, I want to get down to what is your taxable income?
Yeah.
And then let's address that. But ultimately, like I said, that's their biggest problem. And so many successful business owners they're like the cobbler who doesn't own nice shoes. All day long, he's cleaning shoes, making everybody's shoes look nice, but he doesn't have time to take care of his own and have nice shoes because he's so busy focused on that. The business owner's so busy focusing on their business and growing it that they actually are neglecting things on their household, their family side, which is really like, that's where everything really matters. Their net worth, their family, what they're building, how they're protecting all the assets, all that stuff. So it's really helping them to realize that. And then I tell people like, we're like the CFOs for your family. Anything that touches money, we want to help you with. We want to be a sounding board for, and we want to provide solutions in those areas, primarily with taxes, because that's the big problem.
Yeah.
But that's how I explain it to clients.
Yeah. No, that's really good, man. I mean, so let me ask you this, and I think I know how you answer it, but I'm going to ask it open ended and just see how you do. So you're a high income earner. You're making, not in revenue, but you're personally making $1 million or more a year. Isn't paying 6 figures in taxes? I mean, isn't that just something that comes with the territory? I mean, that's not an option, right?
I think that's what the IRS wants you to think.
Yeah.
I think that's what they are very happy if everybody in America would have that assumption and just go about their lives, pay a bunch in taxes. If you're paying a couple $100,000 in taxes, you're paying more in taxes than the average American makes household wise.
Yeah.
That's correct.
Yeah.
So I think that's what the IRS wants. It's a little background on CPAs. They only are required to know about 25% of the tax code to pass the test. They're actually trained really in their schooling. They're trained to work for the IRS. They may not realize it, but I love to ask the client, does your CPA work for you or do you work for them?
Yeah.
And it gets them to thinking. It's like, no, they work for me. And I'm like, okay, so you tell your CPA what's going to happen, how things are going to go. And you say, Chris has got this strategy I want to do. It's using section 179. You need to get with Chris so that we get all this buttoned down and implement it, and they do what you say. Yeah. And in reality, it gets them to realize, oh, wait, my CPA is not like that at all.
Yeah.
And they're very conservative, vanilla. And so it helps them to open their eyes really to how they're probably not getting the best advice that they should be getting.
So you dropped a little hint, and I'm gonna pull it out, We're using Section 179. Now, most of high earners, folks that are listening to this show, my guess is they don't know just by the reference what Section 179 is. What is it?
Yeah, I mean, obviously you do. You're in real estate. But Section 179 is bonus depreciation, which Trump made a lot more appealing. You know, whether you like them or not doesn't really matter. But in the big, beautiful bill came out last year, he now allows for 100% of bonus depreciation to be applied in year one. Unless you're W-2, their limitation is $512,000, I believe is what it's at this year.
Yeah.
And so if you have that, for instance, if you have $1 million of income taxable and you have $1 million of depreciation, it's a wash. It's going to wipe it out. Federally, you're not going to pay any taxes. States, only about 20-ish states have some type of depreciation they allow. So some states will recognize it and save you a little bit. Some won't.
Yeah. So what if your income's active earned though? How does it work then? What if you're not making any passive gains?
Bonus depreciation will offset active too. That's why I said W-2.
Right.
So W-2 person could apply up to $512,000 of bonus depreciation to their W-2 salary income working for Apple, for instance.
Wow.
Yeah. So there's actual firms out there that we spend an enormous amount of time doing R&D and developing these relationships and looking into them and having our team vet everything. It's so important that we don't do anything or get in bed with anybody that is doing something that's incorrect or illegal or fraud or anything. But there are firms out there that specialize in creating these structures where they know exactly how it's done. They know what vehicles are best to use, if there's a trust needed, if there's an entity needed. And they do it all. It's all white glove service. All the client does is basically engage with us and them, and then all the magic starts.
So you're telling me, and I want to hear this again, you're telling me that people can passively invest in a real estate deal. They will get bonus depreciation passed to them, and they can use that bonus depreciation on that passive investment, if it's structured correctly, to offset active earned income.
So yes and no. Ours is not real estate. Ours falls under a different category. For instance, you realize a tiny house is not considered real estate.
Right.
Because a tiny house is mobile. It can be moved. You can pick it up, put it in, move it anywhere. So it falls under a different category. And so, you could buy a tiny house, for instance. This isn't how it's done, but you could put one in your backyard and get some depreciation from it. And it does not fall under those same rules of it being real estate and it only offsetting passive income.
Right. So what if you do what if you do a cost segregation study and you separate out the personal property of the asset from the real property, and you own a percentage of that asset and you're only depreciating the personal property? Would that be classified as real estate?
That's a good question, actually. I don't think I've gotten that one. We have a team we work with that specializes in cost segregation. Because that's only obviously for real estate people, which is, probably only 20% of our clients are real estate people. We're more business owners and then high income earners. So,
well, that'd just be an interesting thing, because the whole point of a cost seg study is to separate out the real estate from the personal. Obviously it's a little more complicated than that. I'm summarizing it for simplicity's sake, but that's the whole point in doing it, so that you can take a portion of the depreciation faster.
Right. But it's got to be a real estate investment deal. It's going to be your primary and all that. So there are some stipulations, but I could probably look into that a little deeper. That is an interesting thought.
It would be. So obviously most of our listeners, they feel like they have a great CPA. They trust the CPA completely. Why is that trust that they're just putting in their CPA to do all the right stuff? Why is that costing them money?
Man, that is a really good question. Like I said, I want to tread lightly, because we're not here to, make the CPAs look bad.
Any more than I'm here to make the financial advisors look bad, right?
Exactly. We want to come alongside them, but I've been doing this a long time, and unfortunately, there are a lot of CPAs that are very close-minded.
Yeah, sure.
They won't even entertain these conversations. The client will send them, "Hey, this is what I want to do," and the CPA will just shut it down and not even give us a chance to talk. I personally, to me, that's a disservice to their client.
Mm-hmm.
If they really cared about their client, if they really wanted to do what was best for their client, and if they were proactive in doing real planning, they would say, I probably should take a look at it. Maybe this is something that's legit that could work for not only my client, but my other clients. And then that's going to make me look even better. But CPAs don't think like that. CPAs don't even really think like a business owner. I'm actually working on a big North American CPA roll-up right now.
Mm-hmm.
We're buying CPA firms, implementing AI, and then we have former CPAs that used to be CPAs that can come to them and speak their language and basically tell them, listen, I was just like you. I was a rat on a wheel. I was trading time for money. I was transactional, which is what a CPA is. They talk, they don't listen. And what they do is they teach them, here's all the stuff that you're missing out on that would increase your revenue and ultimately increase your EBITDA, which will allow you to do a bigger exit down the road.
Yeah.
And it's like, wow, I didn't realize like I could implement this AI to do all the monotonous CPA work. And then I could be one-on-one more with my client doing planning and offering other services and making a lot more money and not wanting to like just hate my life because frankly, like just filing returns sounds really boring to me.
Yeah.
So, that's we're really here to be an advocate for them, but it is so unusual to me, Caleb, that CPAs they are the gatekeepers. How in the world CPAs that aren't networkers, aren't the best, aren't really social butterflies. I don't know how they have been able to position themselves in this trusted spot. But I'll even show a client an investment and they'll bring their CPA to the call. And it's like, well, is your CPA an investment expert or a real estate expert? No. Is your CPA like super successful and they make millions of dollars? No. I'm like, well, why are they on this call? What did they bring to the table? They don't bring anything. And all they're going to do is shoot it down because by nature, they're conservative.
Yeah.
So
it's probably not as extreme as this example, but it's like if I were, I've got one of my big investors is a family and divorce attorney, right? Out of Chicago. I also have an attorney that does all of my legal documents, my PPM subscription agreements, my Reg D filings, all that kind of stuff, right? Like they're both attorneys. They're both licensed by the same bar. But I'm never going to talk to her about this, right? And vice versa. And I think what I'm hearing you say is like a lot of times CPAs are like surgeons. They have a specialty. So some of them are just general physicians, right? They're just general public accountants, right? And they've got a little bit of knowledge and a lot of stuff and no real expertise in anything. And then you've got some like we work with real estate specialized CPAs for our stuff, right? They're surgical, focused on that. But there's other things that they probably miss because of how hyper-focused they are. So I'm understanding like kind of what you do is you come in alongside of the client's existing CPA. You're not, and you're like the specialist that's there helping that CPA and that client find the things that they just don't have the expertise to find any more than my divorce attorney client, which I'll never use because I'm happily married for life. But, my divorce attorney investor is like never going to probably review or draft a PPM for me.
Correct.
Right. So when you do that, you're not asking people to fire their CPA, right?
No, because they're their golf buddy or they're their good friends in school, and it's like you can't do that. And it's like, man, this guy's literally crippling you financially, and you don't even see that you're bleeding because you're just too focused on being buddies.
And you're even paying for the freaking golf round, dude. Like he's,
I know. I literally will tell people like, hey, use one of our CPAs and keep your guy, pay him his fee, don't have him do anything, pay him his fee with the amount of money we save you in taxes.
Yeah.
It's a win-win.
Yeah.
He still has you as the client, even though he doesn't have to do any work, and you get some proactive tax.
So average, give me this quick bullet points. Average income client you work with, average annual tax savings you save them versus what they were doing before.
Yeah. So really it's real simple. Per 100,000, we're basically going to be able to save 25 to 30% of their tax bill. So if that's $1 million tax bill, that's going to be about 300,000 we're putting back in their pocket. But that's the easy way to look at it. If you're going to pay 200,000 in taxes, you're looking at around 50 grand or so being put back in your pocket in total. So who I primarily work with, my average client is like a business owner making 7 figures.
Yeah.
But I have a team and I have other guys in sales, and everybody's got to start somewhere. And we actually, believe it or not, have a strategy that can go as low as, and they're low hanging fruit. They're not really my ideal client at all, but we can go as low as someone making like 200,000 a year and actually wipe out at least their federal income.
Yeah.
So we can help out really everybody. But our main focus is high income earners and business owners are doing really well. I mean, right before this call, I won't say who, but I was just on the phone with one of my buddies that's an agent, and his guy in the league is in the NFL. He's a left tackle. He just signed a monster contract with a new team.
Yeah.
Close to where you're from. And
you're trying to give it away without giving it away, Chris.
Well, that way you'll know.
Yeah, there we go.
So, because I know where you're from.
Yeah.
He literally just got his bonus. He had a $2 million bonus, and after they withheld his taxes, do you know how much it was?
$500,000.
$1.1 million.
Almost 50%.
$900,000. So immediately, what does my guy do? He calls me with him on the phone and is like, Chris, you got to help my boy out. Like, he just is getting crushed. And I'm like, well, the first thing he needs to do is call the HR department, payroll, whoever it is, and have his withholdings reduced.
Yeah.
Because we can mitigate the taxes. I'd rather him hold on to that money, because think about it. Like, if you're able to pay less taxes throughout the year, or if you're a business owner and you pay very little quarterlies or none, can't you reinvest that money throughout the year?
Yeah.
Can't you make money on that money?
Yep.
So let's hypothetically say you pay $100,000 tax bill.
Yep.
And you normally would pay that throughout the year. And I tell you, no, I got a solution. We'll wipe that out. So you now can reinvest that $100,000 in a deal, and you just made 15%. So the end of the year comes, you now have $115,000, and then we mitigate the tax in Q4.
Yeah.
It's a win-win for everybody.
Yep. Yeah. Absolutely. No, it's so good, man. So I want to talk tactics, because I feel like a lot of people, and I know you have them, and that's why I'm saying, but there's a lot of people that, will market these big things, these big tax advantage, save money summit, all that kind of stuff online. Come sit for 3 days and listen to the greatest experts in the world. And then at the end of it, like, I didn't learn anything, Chris. Like, they didn't tell me anything that I could actually do. So I mean, I know that you have to look at everybody's individual situation to see what applies, but give me 2 or 3 specific ways that most entrepreneurs or most business owners who are making a lot of money, they're things that they're typically not aware of that they could be doing that could save them $50,000 or $100,000 this year in taxes.
Sure, yeah. I will, to kind of speak to what you said about going to those things. That is, unfortunately, that happens a lot. It's all smoke and mirrors. It's just really good advertising. People show up to a Zoom or a call or a conference expecting to get like this secret sauce. And then it's like, oh, I learned about the Augusta rule that's been around forever, or I learned about segregation that we've all known about.
Yeah.
And so I always tell people, like, I guess shame on me. I need to do bigger and better branding so more people are aware of what we have out there.
Yeah.
Because I kind of feel bad that it's sort of like a bait and switch. Mm-hmm. And then for us, like, we actually have over 15, nearly 20 proven strategies that work.
Yeah.
So to answer your question, one thing I'll tell people, first of all, just a simple thing, and you guys probably know this, but so many people don't do it. But if you go talk to your CPA, it's a very common thing that business owners do. But you should absolutely be income shifting to your children. That's like 14, 15 grand per year per kid right now. If you have 5 kids, that's some substantial money.
Yeah.
You shift it to them, you open up children's accounts through the bank, savings accounts. They're minor, so you control all the money. You pay them quarterly or monthly out of your business account. To justify making around $1,000 a month in this current economy with inflation, do you have to do a whole lot? No. You don't. No, not anymore. It's not like when I cut grass and made $5 for cutting a whole yard.
1 or 2 photo shoots for my personal brand on Instagram with my kids, right? And I can pay them.
Well, you're exactly right. I do model. To me, what is a model worth? Well, I don't know, you can't really put an exact number on that, but if I do a yearbook advertisement with my kids at the private school they go to, I do some other ads and I use my 3 kids, I use their photo in my business, and I do a Christmas card. Absolutely. That justifies it. I have them open up my mail, have them clean my office. It all adds. It's not hard, but that's just that's a give me one. Another one I like to do, which we're talking more business owners, because y'all are obviously, most people should be business owners. I love our bonus depreciation strategy, which everything that we do, I won't get into real details because that's really what the one-on-one calls are for with the clients, to get into the nuts and bolts.
They need to pay you before you give them the real goods. That's what you're saying.
Yeah,
no,
exactly. We actually prove it to them first.
Yeah, totally.
They pay.
Totally.
I like to let them have their cake and eat it too.
Yep.
But we like that one. We like the bonus depreciation strategies we have. The thing about all of our strategies is they have a multiple effect. So, for instance, $1 in doesn't just get you $1 in deductions. It may get you $5 in deductions, or it may get you a negative $6 K1 to offset.
Yep.
You kind of get the example. Obviously, they're a lot bigger numbers. It'd be like 100,000 in to wipe out 600,000 or 800,000 or $1 million.
Yeah.
But one of the strategies we really like for business owners, for long-term capital gains, for passive income, it would work with all of your listeners. Again, it's a complex strategy, but we personally like it. And basically what they're doing is they're partnering with a company and an entity that has a lot of losses. So they're creating a legal partnership. There's legal entities set up in place. They're sending money. They're putting in money into the deal, the client, and in return, they're going to receive a big negative K1 for that.
Yeah.
The company that receives the income is in Puerto Rico, so they don't care because that's 4% flat tax.
Right.
This is a strategy that's been around for over 15 years. That's already been tried and it passed. So it's a solid strategy. The other reason we like it is half of your money that actually goes into the structure, you can choose how it's invested. So you can invest it with them.
Yeah.
I think they have like a 10 to 12% fund, something like that.
Right.
Or the client can put it in a real estate deal, can put it in crypto, can put it in the stock market. It just goes through that structure and through that
entity. Through that entity,
exactly.
Yeah. Through that failing entity, right? I mean, that's kind of how we're right. Yeah.
Yeah.
So I mean, and that brings about obviously the I would imagine the question, like the legal question, right? Obviously it's a legal strategy, but in something like that, there is a thin line between tax avoidance and tax evasion, right? And I'm sure listeners at this point are thinking like, that feels risky. Usually it only feels risky because you're unfamiliar, right? So tell me, what do you do in a situation like that to make sure that your clients never cross that thin line between tax avoidance and tax evasion?
Right. And yeah, you're right on. Normally I wouldn't, you asked, so I kind of gave nugget.
Absolutely.
But
I love it.
takes a 30 to 45-minute presentation to actually explain that structure.
Yep.
And after we do that and we explain it to the CPA, majority of the time, it goes really, really well. But you're spot on. What's so difficult about our job and what we do is the legal impact. Because the IRS is involved, it's not just like an investment. It's not just like a financial planner or doing an investment where, I could lose my money. There's the legal ramifications of it of, if this isn't legit, how much trouble could I be in? How many penalties? How much interest? Blah, 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 blah.
Yeah.
So what I've learned is our main goal and our main objective is to build rapport with the client and earn their trust.
Yeah.
I want people to trust me more than anything. My reputation is everything. What I've built over the 20-year career is everything to me, because I can't ever have people doubting me or my abilities or my team's abilities.
Yeah.
So number one, how I combat that is by ultimately earning their trust. But I would 100% agree that is our biggest obstacle, is the fear of the IRS, essentially. And I like this strategy, but I'm more afraid of the IRS, which is kind of sad that that's what's happened in our country, that we have to live in fear of a government entity that has really been taking money from us, way too much money from us for years and years. Ultimately, though, to really provide a peace of mind for that, Caleb, is we have them meet with our legal team, our tax attorneys, our CPAs. We have their CPAs, their attorney. We all get together and we talk it through. And either it passes with flying colors and they green light it and we move on, and then they usually end up referring people to us, or they just can't get comfortable with it, and that's all right. We pivot and we show them another strategy. That is why we have all the strategies that we have, because it is not one size fits all, and everybody's not going to like everything. That doesn't exist. So we have all these different options, because you may prefer to buy a tiny home and do a Section 179. You may prefer a leveraged charitable strategy. It's dealer's choice.
Yeah, absolutely. So, I mean, a lot of times you think back to the Boston Tea Party and the role that it played in literally the American Revolution, right? Like, I'm just going back. I'm not trying to get political, but I am like referencing off of something that you said just a moment ago, that the tax that Britain put on tea was 3 cents per pound, which was about a 6% tax. That tax literally triggered the most historic protest in history, bigger than any of these march the street and wave your flag identity politics protests, and literally was a spark unto revolutionary war over a 6% tax.
Mm-hmm.
And now you got people that are, pardon my French, working their ass off to be successful in a free country, in the greatest economy that's ever existed, to try to live the American dream, make 7 figures annually, or become a millionaire, or become a decamillionaire, whatever the thing is. And they're content with paying 50% back to the government as a thank you for the opportunity to be successful.
Mm-hmm.
And what I'm hearing you say is, like, we need to stop being afraid to implement legal strategies that are present in the current IRS code, and we need to stop allowing our own ignorance to be the excuse for why we don't use it.
Yeah, the reality, Caleb, is we've had the wool pulled over our eyes.
Yeah,
and we don't want to get political or anything. This could go.
Well, I took it there, Chris. So go with me, baby. Come on.
The majority of Americans have blinders on right now. They're like the horse.
Yeah.
And they have blinders on and they don't even realize it. And they've been fooled. and now they think this is the norm.
Yeah.
And that's where the problem lies, is that it's become the norm. We don't even think anything about it. We don't think, oh, that this is not like, just like how we're glued to our phones all the time. We just think that's normal. But we all know now, like, it's really, really bad for us to do that. We spend so much time on social media and all that. So I think ultimately, we've been deceived and fooled. And I think that's what they want, the powers that be. And that's why I said, shame on me. I need to be an even bigger advocate, which is, why I'm getting on shows like this to get the message out there. I mean, this is the gospel of tax savings.
Yeah.
And we're here to advance it.
To declare the good news, Chris.
Yeah.
Let's go. You don't have to pay 50% of your income in taxes. That's the good news. You don't have to. And there are legal ways, like 2 or 3 of the strategies you've already mentioned, plus 15 or 20 more strategies that you help your clients walk through to avoid, and like you said, you're saving people 25 to 30% on their tax bill.
Right. We're not trying to avoid taxes altogether. Like, obviously,
of course.
We have a giant machine of a country. It cannot run and it cannot support the way overpopulation that we probably have from everybody moving in without tax dollars. So we do need tax dollars, but we believe you should pay your fair share of taxes, not, again, like I said, fund society.
Well, and I think just remove the fundamentalism or the idealism of it or any of that kind of stuff, and just say, like, if you legally are allowed to pay less, then why would you voluntarily pay more? Unless the problem is you just don't know how to fix it. You just don't know. And that's what you help people with. You help people know what they don't know and help their CPA know what they don't know, so that they can legally create avenues for saving $50,000, $100,000, $300,000 a year on their tax bill, which is phenomenal.
And
so
think about it too. So we help W-2 people out, business owner out. You're selling a bunch of crypto and you're going to have a big long-term capital gain on that, or stocks, or a business, exiting a business, all of that stuff.
Yep.
We help all those people out. That's, we can really work with anybody when it comes to that kind of stuff.
I want to ask you one last question before we go into what I call the exit round, which is I'll ask everybody the same 5 questions on the show. It's kind of lightning round, just fire it off the top of your head. But I want to ask one last question. This is something I'm always thinking about, right? Is if you're a business owner, you are wanting to optimize for valuation if you're thinking about exit, right? You're wanting to optimize for max valuation so you can get the most money for your business when you sell it. But some of the tax advantage strategies and the benefits of a business owner, like of being a business owner, and some of the things you can do, like figuring out legal ways to pay for personal stuff through the business and depreciation and all these different things, can actually affect at some point your business's valuation in a negative way. So how do you work differently with clients who are kind of wanting to optimize for save on taxes while also trying to optimize for max valuation on their business?
Yeah, great question. Well, first of all, if you're working with us actively while you're still in your business, if I'm saving you a significant amount of money, hundreds of thousands of dollars from taxes, that's now hundreds of thousands of dollars that you can reinvest back into your business, which is your biggest asset, your biggest investment. If you're a business owner, that should be. Everybody should know that. If you don't know that, then you're behind the 8 ball. So that's number one of why I think it's super important to do all that. Secondly, I have a strategy that I can actually show a business owner how to pay themselves without it coming out of without it being a taxable event.
Okay.
And why is that beneficial? Because of how we structured this and how it's paid, where it's essentially like paying yourself from a capital account. If you pull money out of your capital account, that's tax free because that's already taxable money.
Right.
Right. Because that's your money for whatever you got to do, your emergencies, whatever.
Yeah.
This is a similar structure that's basically showing people how to pay themselves without it being a taxable event. What that means is if you pay yourself $1 million of K1 through your business, it hurts the value of your business.
Right.
If you pay yourself, $800,000 tax free through this structure. It doesn't have any, it actually benefits the business. That $1 million goes and adds value to the business. And then year
Right.
after year, business is increasing. And it's a complex strategy. I don't have time to get into all the specifics of it, but that strategy can be very powerful for actually increasing the value of the business and ultimately the EBITDA, which is what matters in an
Right.
exit.
Right. No, that's really, really good. And I think, I assume that you had a strategy or probably an arsenal of strategies for that kind of situation. So I think a lot of our listeners are folks who are building their business with the end in mind, hence own the exit, right? They're looking to build their business to a point where they can either absentee owner or they can fully exit the business and just sell it, or some other version of that, right? Get themselves out of the golden cage of their own success and be able to actually live the dream that they set out to build the business in the first place, which is financial freedom, and uh, obviously one of the bigger hindrances to that freedom is how much you're having to spend out, how much you're losing to the government, and that's basically the solution that you help folks with. So, before we jump into the exit round, how can our listeners get in touch with you or contact you if they're interested in getting some consulting from you on how they can save significantly on their taxes? What's the number one way that they can reach out to you?
Yeah. So obviously we are our website, oneatlantaxsolutions.com, which is real, easy to find everything you need on that. And then our office number would probably be the second best way. That number is 470-524-4996. So the
Okay.
website, oneatlantaxsolutions.com. You can book with us through there. You can find all of our information on there. And then that phone number, calling it or texting it, can also reach us as well.
Awesome. Excellent. Repeat that phone number one more time.
Phone number is 470-524-4996.
Excellent. Excellent. All right. So let's jump in. That's awesome. So reach out to Chris, reach out to his team. If you are looking to save 25 to 30% on your tax bill this coming year, 2026, you want to save, you don't want to give it to the government. You'd rather reinvest it in your business, reinvest it into alternative assets that are also tax advantaged, things like oil and gas, things like real estate, things like other things, right? So let's look at the exit round, Chris. Real quick, we're going to go at lightning speed. I ask the same 5 questions to every guest that jumps on. This is mostly just because I enjoy it. So, number 1, what's your all-time favorite book on business?
I like probably one of my favorite books would be the Rockefeller one. But my mentor just came out with his third bestseller, and it's actually really changed how I think.
Okay.
And it's by J.T. Fox. It's Billionaires versus Millionaires Thinking.
Okay.
And he interviews actual billionaires. And he's actually introduced me to 3 billionaires last year that I got to personally meet, which is just an incredible opportunity. But the one thing I learned about that is, and really through him, is how a billionaire thinks is completely different how a millionaire thinks. And right now, our goals, we're thinking finite. I want to be a millionaire or a multimillionaire.
Yeah.
But if you can learn to think like a billionaire, not saying that you're going to be that, but it will change how you think and how you operate your business.
Absolutely. Absolutely. That's great. So, JT Fox, Billionaires versus Millionaires?
Billionaires versus Millionaires Thinking.
Billionaires versus Millionaires Thinking. I love it. So a big part of owning the exit is building passive income. So I always ask people, what portion of your current income would you consider passive?
So I call it mailbox money.
Yeah.
Everybody needs mailbox money, because years ago, I think I was in a pinch and I realized, holy crap, I put all my investments in private equity fund type deals that were long-term, 4, 5, 6-year deals. Well, if you need money, you can't get money out of those things. You can't get your money back. And it dawned on me, like, I got to have consistent mailbox money coming in. I got to have something coming in monthly or annually. So that way, in case something weird happens or I get in a bind, I don't get caught with my pants down. So I would say I'm probably 40% is in passive.
Passive income. Excellent. That's a high number. That's where a lot of people would love to be. So that's really good. That's great, man. So
I'm fortunate that I've been in the business with doing this with my dad. So I got to learn everything that took him a decade plus to learn. I got to learn in my 20s. So I did have a huge leg up in life.
That's awesome, man. That's awesome. That's great. That's the a wise man leaves an inheritance to his children's children kind of thing. It's not just money, it's the knowledge, it's the wisdom, it's all of that. So So what, I mean, you're really committed to your business and helping people. What's one thing that you wish you could do more, but your commitment to the business kind of holds you back or keeps you from it?
Well, that's what I'm doing this year. So, you got to spend money to make money. I learned that years ago. We were in a rut. We were making good money, but we weren't making as much as we wanted to. And we realized, okay, we got to reinvest in the business. We got to reinvest in marketing and branding. And I had a mentor ask me last year, Chris, what do you want to do? Do you want to sell? Do you want to do the one-on-ones with the clients like you've been doing for the last 17, 18 years? Or do you want to this or that? And I was like, well, really, like I've brought in this team now that's growing. As we grow, we'll just bring on more salespeople essentially. And the reason I did that is because what I've learned, what I really enjoy doing, and what I tell my clients is my superpower is I'm a connector of people. I believe I have an incredible network of people. If you have a problem that pertains to finances, whatever it is, more than likely I or someone in my network has a solution for it. So I am heavily invested into networking and expanding my brand. So every month I'm at a new conference or a new convention, meeting people, rubbing elbows with them, getting to know them.
That's awesome. That's awesome, man. So if you could go back in time, say, 19, 20-year-old Chris, you're just starting out. What advice would you go back and give yourself then about building and growing a business?
I would say don't be so trusting, because I'm innately trusting because my beliefs kind of require me to be like, I don't want to be just a skeptic about everything.
Right.
That sounds miserable too.
Yeah.
But I do give everybody the benefit of the doubt until they prove otherwise. But that's come back to bite me more times than not. It's made me who I am today. I've learned a lot from it. I lost a lot, but I learned a lot. I grew from everything. So I don't regret it that it happened.
Yeah.
But I think if I could give my young self advice, it would be trust but verify.
Yeah.
Like verify
Trust but verify
to the 9th degree as much as you can. Because I mean, there were bad investments. Like one of my guys that I work with on for basically people that get caught up in fraud or schemes, bad stuff. He actually ran one and was on Oprah Winfrey, and she didn't even know it was a scheme. Wow. And so that's how good some of these people are at fooling everyone. There was just a big one a couple months ago, like hundreds of millions of dollars, a real estate guy that embezzled people's money. Yeah. All his money. So trust but verify.
Trust but verify, 100%. No, that is one of the words that I live by, statements that I live by. So I love that. I agree with you 100%. So what is your strategy? And you've touched on this, but feel free to give one or two strategic tips. What's your strategy for creating time freedom and financial freedom for yourself and for your family?
That's a good question. I like that. I always tell people, whether you're worth 100,000 or 100 million, it doesn't matter, because time is the greatest commodity. Warren Buffett, Bill Gates, all have the same amount of time in the day. God's never given man more than 24 hours. Yeah. That's just a fact. And so to be truly wealthy, it really doesn't matter how much you have. It matters, do you own your time? Yep. Do you work because you want to work? Do you not work because you don't have to work? That's true wealth to me. And so personally, for myself, I have a goal of what I want coming in, mailbox money wise, of a certain amount that will free me up to do what I want to do, to be more involved with my family. I love my life, but I actually just told buddies this last Friday, I don't ever get to play golf because like I have 3 kids and a job. Like, it's like, how can you go leave your kids on a weekend and play golf?
100%. I'm right there with you.
My goal is, because I want to be better at it, but it's not like other sports you can rely on your athletic ability. Golf, you have to play, you have to practice, right? And I said, my goal is, and my reward for reaching that goal is, if I can get to where I want to be, where I can play golf when I want.
Yeah.
and play golf more. That's a personal goal that I'm going for, but that means I have financial freedom.
Yeah. Yeah. So that's like that's your signal. That's great, man. So, dude, it's been a great conversation. I've enjoyed it so much. I'm excited to continue to develop the relationship directly with you, and keep, maybe have you on the show again in the future, and continue to figure out different ways that we can learn and grow and help each other. So, and I know a lot of our listeners are going to be excited to get connected with you as well. I mean, anytime you tell people they can pay the government less money, and you can prove that you can do that, I think anyone who wouldn't take you up on calling you at that number you mentioned earlier, or going to your website and hitting you up, and at least letting you show them what you can do. I mean, I think that'd be crazy not to. So thank you so much, Chris. Appreciate you for being on Own the Exits. Any kind of final words you want to share before we wrap this one up?
All I will say is don't wait till the last minute.
Yeah,
I think a lot of people wait until the end of the year and they're like, crap, I made too much money. I'm going to have too big of a tax bill. I need a guy.
Yeah.
And that's great. I'm your guy. But let's start talking now. Let's get you and your team comfortable with the strategies that we recommend. So then when we're ready to implement them in Q4, everything's already good to go. We've already done all the heavy lifting.
Yeah. Excellent. Love it. All right, Chris. Appreciate it. Thanks, everybody. See you next time.